when it comes to Ethereum ecosystem, but like on some of the other chains, I'm not as well versed. Like maybe like a level 2 or 3 or two and a half, for example, right? But you can kind of extrapolate this and apply this to other chains if you want, right? So what does level 1 look like? Which is like, so I like to, for level 1, I like to call them fake crypto users, right? So they're not really using crypto, right? So they just, they've heard the term crypto or cryptocurrencies or Bitcoin, Ethereum, but all they do is really they just go to one of these exchanges, or in the case of Celsius, some sort of custodial centralized finance investment company or something. I don't even know what to kind of classify them. Right. So you go, you use any one of these, you're level 1, right? You're not really using crypto. So what you're essentially doing is you're just giving either your money to them or your crypto to them, right? And then they have custody over your crypto, which in reality they own your crypto. You don't own anything. All you own is a number in one of their databases, and is a promise, right? Sometimes an empty promise, but at least that's what you own, right? So this is not what crypto is designed to do, and this is not how you should use crypto. If you do this, you're actually promoting centralization, and it's actually against what crypto is designed to do, right? So if you lose your money using any one of these, I have no sympathy for you, to be honest, right? Like I may sound a little harsh, but I'm a hardcore
dude. Fuck being that's not harsh. I have a sense of Schadenfreude. Like there's a certain amount of like, I told you.
Right. So yes, so this is level 0. So, or level 1, right?
Yeah.
So you if this is you, then I think you should at least get to level 2.
Yeah.
Right. But yeah, but if you want to do this, then good luck, right? If one of these things like fails, then yeah,
you don't
good luck.
look far at the downside, right? Because like you probably heard on the news about like services like Voyager, services like BlockFi, right? Like a lot of these, like they are down underwater, right? They are like some of them they even lock up they lock up withdrawal, meaning after you put your money in, you can't even take it out because they don't have enough money to pay everybody else.
Right.
So
yeah, I mean they have to run a deficit, most of them, because they have to make money too, right? They it's like you're giving them free money. You think they're not going to use your money to do some stuff. So like, yeah, so if you're here, I think that you're very early on this whole journey, right? So this is it's good to learn. This is a stage where you want to learn about some of these things, and it's okay to have a little bit of money on these exchanges, right? Or maybe to use the exchange to like get on board, and then with more knowledge you're going to be able to basically move on, right? But this shouldn't be your like final resting place. This shouldn't be like this is it, right? This is all I ever wanted to know about crypto, right? So the next level is a lot better than the previous level, right? So this level, the theme is self-custody, right? It's very important. So self-custody means you now truly own your crypto, right? So when it comes to self-custody, there's a whole bunch of like stuff on that, right? So a couple of examples, right? So I can actually show what self-custody kind of looks like, right? So one way to do self-custody is with a MetaMask hot wallet, right? Now, hot wallet is not the safest way to store large amounts of crypto. However, it's still self-custody, right? So if you keep your seed phrase private, then you still have control over your crypto, right? Like it's not obviously you need to learn how to keep your seed phrase private, and there is also more to it than just like writing down a piece of paper. You can do that like to start, right? But this is where you want to do some research. Now even though like hot wallets are not the most secure, they're still useful. So like for example, I have a hot wallet for just contract deployment purposes, configuring contracts. I don't want to be whipping out my cold wallet every time, or ledger every time I just deal with contracts, right? Like I have the private key exported as encrypted JSON, so I can, if whenever I need to do like 100 different contract operations, I can just load that encrypted JSON into memory through a password, obviously, and then that would allow me to sign like 100 or 1,000 transactions without having to click my Trezor 1,000 times, right? So it's still useful, but it's not the place to do large amounts of crypto, right? If you want to store large amounts of crypto, you should look into one of these wallets, like for example, Ledger, right? So Ledger actually, MetaMask does support Ledger, right? But the difference with this Ledger connection is that the private key is actually not on your machine. So the private key is stored inside your device, right? So in this case, there is no way for somebody to gain access to your private key unless you give it up, right?
I can also more to this too, like so what James described about the concept of like a hot wallet versus a cold wallet. I guess for this case it's a cold wallet, right? It's the reason why you want to separate this, right, is the same reason as why like you don't want to carry all your money in your wallet when you walk out, right? Usually you keep your money in a bank. I know that we're talking about crypto, but you should want to have a safe place, right? You don't want to just keep it with you at all times, right? Because what if you get robbed while on the street, right? You lose whatever's in your wallet. You don't lose like your whole net worth. The same way with crypto wallets too, right? You keep like a small amount of whatever you use on a regular basis in your hot wallet, so that when if you, let's say you're into buying NFTs, right? You can use your hot wallet to buy the NFTs, right? Or maybe if you have if you want to participate in play like a blockchain game, right? You connect your hot wallet there, so that if for whatever reason that hot wallet gets compromised, you just lose whatever's in it. I've seen some people, they take it to the next level where they actually have like one hot wallet for every single app they use, right? So maybe they have one for like a gaming for this game, right? And if they use this one just for collecting freebies, they have this one just for to participate in, let's say, a DeFi, right? And their logic is within the Web3 space, within the space, right there, you cannot assume that everybody, every website are like benign. There will be some websites that are created to trick people, right? And for someone who is not as talented, you're just a level 2, right? When you go to a website, usually they have a pop-up that say, "Do you want to connect the wallet?"
Yeah.
Some may end up signing a contract that you didn't know, like within the blockchain, that says, "I consent to transferring like all my money to this website." You don't know.
Some guy got his like entire stack cleared out, right? Like his ETH, every ERC20 token he had, and it was connecting to a bad
because
contract,
of approvals.
So.
We can briefly touch on approvals. This is getting pretty advanced, right? This definitely not level 2, right? So if you don't understand this stuff, that's okay. I was gonna progress, kind of go slowly into this, right? Like,
say maybe we come back to it, but maybe just go through your levels and come back to this.
I feel like Ed is advancing a little too quickly. This is like level 2 is really about self-custody, right? I would consider you a level 2 user with any type of custody, right? Like self-custody. Now, it may not be good self-custody, but as long as you get off these damn centralized exchanges, you're good, right? You're in the next level for sure, right? So then another thing once you have self-custody, right? So what good is that? Well, first of all, you're now self-sovereign. Now, self-sovereign does not mean secure. We can do a whole other session on sovereignty versus security, right? Sovereignty just means you control your own destiny, right? You can make decisions independently. Nobody can tell you what to do. But security is like, are you gonna lose it? Right? Like, that's different. So you can be self-sovereign, but not secure, right? So security is a big topic. I don't really want to get in too much into it right now, but if you do decide to do self-custody, do research, figure out a good security plan, how to handle this stuff, right? You don't want to get hacked, or worse yet, you don't want to lose your crypto, right? That's even worse, right? So now another thing about a level 2 user is, now because you have self-custody, you have control, then you can actually start to interact with DeFi, right? Where DeFi is basically is decentralized finance. So it's any project that's completely based on smart contracts, right? So Balancer is an example of a DeFi project. Uniswap is another DeFi project, right? Where you can now connect your wallet, and then now you can use a decentralized exchange, right, as opposed to a centralized exchange. Now, the benefit of a decentralized exchange is transparency, right? Like you get to see like every trade through the pool, right? Like everything is recorded. There's no fake, like they cannot record a trade that didn't happen, right? Stuff like that. So this is getting into like, this is still, if you're using this UI, like if you're using this UI to trade, for example, like Uniswap, then you're level 2, right? The reason is that you're still level 2 is because if this UI goes down, you have no way to do anything, right? So so that makes you kind of a level 2, because you can use DeFi because now you have self-custody, but you're still limited to you're still at the mercy of the developers, right? Because you don't know how to directly interact with smart contracts. You don't even understand the contracts. So this is you're still level 2, but at least you know how to use DeFi, right? NFTs, same thing, right? OpenSea. If you go on to OpenSea, same thing, right? Buying, selling NFTs, that makes you level 2, right? So that's pretty good. So at least you're kind of a real crypto user now, right? Like you know, kind of like basically what this is all about, right? You're not limited to just Coinbase and Celsius, right? Okay, so level 3, right? So what does it take to get to the next level? So the next level, the theme is really, I would call it blockchain analytics or blockchain interrogation, right? So you're a power user now. So what does this level look like? At this level, you can do some limited, you can really interrogate the blockchain now. You can look at the blockchain. You can now understand what the blockchain is actually doing without relying on other people to tell you what's going on, right? Another theme that kind of comes, or another kind of component that comes into play, is now you can run a node, right? So running a node is a good step into becoming a level 3 user. So like Geth, for example, is a Ethereum client. So if you set that up on your machine and run that node, you can now interact with Ethereum without going through any centralized entity. You're fully decentralized at this point. So if you can run a node, right? If you don't run a node, you're still going through a centralized entity. Let me show you why, right? So this thing right here, MetaMask, right? If you look at
before jumping further, do you want to elaborate for those who are told very new, what is a node?
Oh, what is a node? So a blockchain is essentially a network of nodes, right? So a node is in reality, a node is just a piece of software that is part of the blockchain network, right? That allows you to interact with other nodes in a peer-to-peer fashion without going through there's no like it's not going through a central server. Like for example, if you go to Amazon.com, you're very likely hitting a server that's either owned by Amazon or a CDN, right? Like it's all guaranteed to be centralized. If you hit if you run a Bitcoin node or Ethereum node, when you communicate, you're talking to other nodes. Now, you can also talk to a node owned by a big corporation if that's your choice, right? But you can also talk to other nodes that are not owned by big corporations if you wanted to, right? And what I was going to show you guys is so if you go to settings, networks, right? Yeah, see, if you're using MetaMask, there's a good chance that you see this, right? No good. Well, okay. Put it this way, right? It's not that it's no good.
Could be better.
Yeah, or if you have no alternatives, then that's no good, right? If you have no idea how to do anything but that's not good, right? That means you're level 2, right? Level 3, you should be aware of this, right? This is Infura. Infura is a big company. They own a lot of a big share of the Ethereum like infrastructure, right? So like if everybody's hitting that node and that node goes down, either because of something malicious or just because of an outage, then you're kind of yeah, right. You're basically sitting duck at that point, right? So what level 3 allows you to do is you look beyond that, right? You see Ethereum for what it is, right? It's just a collection of nodes, which means you can also run a node and be part of the network, right? And if you're part of the network, like the peer-to-peer network, then you can get rid of this, right? You can actually even run a node. Well, this is a little advanced. I wasn't really going to want to go into this, but
that screen
right?
Just like someone just shat their pants.
Yeah, but like you can run this node and talk to it localhost, right? Like local machine. No funny business, right? Your own machine. You can talk to it, right?
What you're doing is you're running like one copy, or not even copy, but you're just providing your computer like to the whole like process, like the whole network, right?
Right.
Transaction.
Yes.
You are providing computing power to support the network. Yes. So that's the whole idea of node, right? Because the whole idea of like Bitcoin is instead of one server like processing everything, we want to have like as many computers in the world to do the processing together, so that if one goes down, right, there will be like millions out there like covering, like continuing the thing, right? So that's the nice thing about like blockchain. And by setting your computer up as a node, right, by running a node, right, you are contributing to the computing power. You're making the network stronger, and if you're lucky, you may even be rewarded for it, right, through the process of mining. But
and I think the bigger thing though is like you have a copy, at least. Like, again, I run a couple Bitcoin nodes, but I'm not sure exactly how the ETH ones might be different.
Yeah.
But my understanding is, especially now under proof of work, it's fairly the same. Mm-hmm. So you have a copy of the blockchain. So I don't need to rely on a third party to tell me that this address I have actually holds the Bitcoin that I think I own. I can look at my copy of the blockchain and verify that that's true. Right. So it completely removes it from relying on a third party to tell me what I have or tell me how I can transact, because I can also use that node to send my transaction. So it's really just taking ownership of all of the data behind it.
Yeah. So level 3 is mostly around read-only operations. But at this point, you should be familiar enough with the blockchain that you know how to set up a node. You should be very well versed with Etherscan or any blockchain inspection tool. Now, all of this stuff, by the way, you can do if you have a node. But like I said, don't make your life harder for yourself than it already is, right? Like if the tool is available, use it, right? Like if Infura is available, I'm not going to say, oh no, I'm going to get rid of Infura. and I'm gonna put in my own like super slow node, right? I'm not gonna do that. But if Infura shuts down, I'll use mine, right? That's plain and simple. Like always have a that's your backup plan, right? Not your, this shouldn't be your, like if Infura is up and running, just use it, right? Like it's using it is not even it doesn't even cost anything, so why not, right? They're paying.
I would argue why not is that it does get, at least again, speaking as running a Bitcoin node, I send all my transactions through my node because then I'm keeping my XPubs and like my addresses to myself. Whereas if I send it through one of the wallets nodes, they can see all of my transactions and what is associated with that address. So it does keep some more data private if you use your.
That is true. With Monero is especially important, right?
Yes.
If I'm using Monero, I'm running a node, right? Like, what's the point of using Monero without running a node?
Well, yeah, so, Monero, the whole thing is privacy. So, but like even on these ones where the thing, the focus isn't privacy, it still has a benefit from the privacy angle.
Yes, yeah. Now, what is Etherscan, right? So every blockchain has a blockchain explorer, right? You can Bitcoin has one, and multiple, right? Every blockchain has a ton of different ways to look at it. Etherscan just happens to be the biggest for Ethereum, right? And the way you use Etherscan is you get to look at the transactions, right? That are basically on chain, right? And you need to be able to, as a level 3 user, you should be able to understand what these transactions are doing, right? You should be able to be able to see, oh, this transaction, this is transferring ETH, right? You should be able to see like oh, like this is like calling a contract, right? It's a contract interaction, and it's calling one of the functions, and you should be able to see what the logs tell you, right? You probably don't need to see the state changes. That's a little deep, but you should be able to understand at least how to go through this and figure out like what you want to know, right? Like a lot of the times you're like, oh, this guy is selling a ton of tokens, that guy is buying a ton of tokens. How are they figuring this stuff out? For the most part, it's through this type of blockchain interrogation, blockchain analytics, right? So this is, you should be able to do this. Like this shouldn't look like gibberish to you if you're a level 3 user, right? This should look very, like you should be able to basically use this, and it should almost be like just child's play, right? If you're using this, so like you should be able to understand this, right? Another thing that's good to be able to do on Etherscan, for example, is to be able to interact with contracts directly, as opposed to for example, going through OpenSea or DeFi protocol. Give you an example, right? So the wrapped ETH contract. The reason I like to use the wrapped ETH contract is because it's the easiest contract I can find that's still doing something useful. Simplest contract ever. That's still actually doing something, because otherwise you have to look at tutorial contracts which don't do anything, right? So if you use Etherscan, you can look at the contract. Oh man, I don't know, if you're level 3 user, if you're level 4 user and you see this, you're just sad, because all of this is forever burned. Nobody is getting any of this stuff back ever. Like the million right here, gone, right? But you as a level 4 user, you see that, you know, right? Level 3, not so much. So if you click on read contract, these are all the contract functions that you can interact with, right? So you might be able to look at the total supply, right? That's something that you don't have to rely on Uniswap to tell you what the total supply is, right? Why like you can directly look at the chain, right? Even if you're not doing it like as deeply as like maybe it's, you're not doing it from code, but at least this is much more this is a lot closer to the blockchain than say like Uniswap, right?
One other example of why like looking at total supply is important, right? Like suppose you discover like a new NFT project, right? And the developer said, oh, this is a very rare like Doge like collection, right?
Maybe Doge
1,000, right? They claim on the website there's 1,000, but you can actually go to the contract. I put it on Etherscan,
right.
and then look at the token supply, right? To see like are they bluffing or are they really true? There's only 1,000, and sometimes
you trust this, right?
Yeah, there's a few times where like people say that there's a set amount. It turns out that nope, they actually minted like 10 extra amount, right? They actually keep 9,000 in their own wallet and they sell that last 1,000 and they hope that people will pump it up so that they will crash the market. So like being able to read this stuff, right? To go beyond like what like the seller or the like all the like a second party is saying, right? Being able to look at it from at an objective website, right? Objective source, it gives you that edge, right, over a lot of these people who buy into these tokens without knowing what it is and just believing what the seller says.
Yeah, it's like trust but verify, right? Like for example, if you're on CoinMarketCap, which is everybody's favorite, right? Every time somebody new comes to crypto, you always tell them to use CoinMarketCap. Yeah, but how do you trust this number? Right now, here's the thing, right? This number is I have no idea where they're getting this from. Now, is it they're saying that the total supply is this right here, right? And this is the contract. Now you can go verify it, and it clearly is not, right? So if you divide this by 1 times 10 to the 18th, this is good knowledge as level 3 user. You should know what these decimals are. Then this is the amount of ETH currently in the contract as total supply, right? And as you can tell, like this is clearly does not match up with what this is saying, right? So I have no idea where they're getting this from. Maybe they're caching it, maybe it's in their database, maybe it's somewhere else. But this is what I mean by you always have to go to the source. With anything that has a contract, there's no excuse not to go to the source to look at what's going on, right? And also another thing is if you want to look at like an address that has some wrapped ETH, I don't have any, but you can put your address here and then you can query and then you should be able to get your balance, right? Good way to verify things, right? So like this is level 3. So level 3 is you're limited to you're pretty much where to look for things on chain, right? You need to be comfortable with that. There's I put a couple more there, like Dune Analytics. It's a website that allows you to write SQL queries against the blockchain. You can there's a lot of good charts that people have produced. That's a pretty good place to do some analytics if you want. The Graph is another one which allows you to do GraphQL against the database or the blockchain, right? And then you can also query some useful data back from most DeFi protocols. They all have DeFi connectivity, right? They all connect to the graph, right? And I feel like so I'm kind of like pause a little bit here. I feel like if you can get to this stage, you're good. Like you're pretty much. I feel like you can independently verify things. You know where to look for things. If something doesn't look right, you can always verify on chain. And then you're like you have like that trust verify mentality. You have self custody. You know how to interact with things. You're pretty much I consider you a power user at this point. Like you're really, and you can stop at this stage, right? Like I'm not saying that everybody needs to progress to level 4 because unless you want to work in the blockchain space, right? Unless you want to develop these contracts, and unless you want to become an auditor and audit these contracts, or like be super like efficient at developing like MEV and bots and arbitrage and do all the crazy stuff, right? This is a good place to actually stop. I feel like I feel like most blockchain users, if you can hit this level, then you're definitely a minority, right? Like you can pretty much get whatever you want from the blockchain. And again, I've been showing you guys how to do stuff on Ethereum, but other chains very similar, right? Like Solana would be like SolScan, may not be as full featured, right, as Etherscan, but you can still look at on-chain data for Solana. There's like a lot of these blockchain explorers, right? So I feel like if you want to be able to reach this level and you're comfortable staying at this level, then you're good, right? Now, to reach the next level, which I call a developer, you need to be able to understand smart contracts. There's no way around that, right? So this is the theme for this level, right? Because smart contract programming is what holds all of this stuff together. It runs all of the DeFi protocols, runs all of the NFTs, it runs all of the DAOs, it runs all basically the back end of Web3, right? So if you don't understand smart contracts, then there's no way to get to level 4. Now, you don't have to learn Solidity. You can, if you want to learn like Rust and look at Solana contracts, that's okay. But you do need to know at least one smart contract programming language, right? And I've put down some of the tools that a typical developer would use to develop these things, like ETH Brownie, Hard Hat, Tenderly. These are very common tools, Ethers.js, Remix, right? Or in my case, I don't use Remix, I use VS Code and ETH Brownie, right? So you don't have to really get to this level, but once you're at this level, like nothing can really stop you, right? Because a good example, right? Like suppose, let's say the Infura is down, Uniswap is down, InstaDApp is down, all these UI, everything is down, right? You can still get your money out of the contract because you know how to use these things, right? So you for example, the wrapped ETH thing that we were looking at, right? You know how to check, the contract address, right? You probably have that saved somewhere. And then you can so a level 4 user would use the blockchain would be like this. So you can say wrapped ether equals like, right, like ERC20, right? And you would put the address in, and then you can see the total supply, right? Exactly the same as what we saw before, right? And right, so this is the kind of stuff that a level 4 user would do, right? So it'd be like balance of, right? So you can even encode, right? So you can do this. You can say total supply encode input, and then you would get this encoded input, right? I'm just showing you guys what a level 4 user does. I'm not saying that you guys need to go and do this crap, but, and then you can walk over to Tenderly, right? And then you can say, hey, I want to run a simulation, right? That's a thing that a level 4 user would do, is before you do any transaction, simulate it, right? Like you would go to a simulator, right? And then you would say, hey, I want to do new simulation. I want to use the wrapped ETH contract, right? And then I want to simulate calling this function, right? Total supply. I put it here, and you should know that this is that function because this is a selector, right? Then you simulate the transaction. Then it'll basically go and simulate that transaction for you, right? And then that'll actually tell you exactly what the contract is doing, right? So being able to read smart contract code is a requirement for getting to this level, right? Like this tells you exactly what that function is doing, right? It returns the balance of the contract. Yeah. So again, you don't have to get to this level. This is a requirement if you want to work as a smart contract dev in this space, but it is not a requirement to even be a power user in this space, right? So I just put it here just because I think Ed and someone else, they were curious about what level 4 really is. This is what it is, right? So yeah, so that's kind of where I feel like if I do more stuff, people would just get more confused. So I'll just stop right here. Yeah, this is it.
Yeah, yeah. Thanks for sharing the 4 different levels, and like, yeah, I do agree that like like ideally like in the crypto space, right, as like a secure network is a secure community. Like if we can get as many people to be well informed, right, to be like at the level of power users, like I'll say that I'm like crypto could go really far. Like I'm like you have less cases or less instances of people like losing their like coins, or even just losing any type of assets, right? Because like they had it on a centralized exchange, or maybe like because like they didn't do their due diligence, right? And they had it on. They bought like an ICO or maybe even like a I guess ICO is outdated, but nowadays people getting into like a NFT collection, right? Where they make all these big promises, but they had no. But the project like dev, I never intend to like follow through with it, right? And you could. And if only they had looked into the contract, they would have seen that there was like a backdoor like code, right? And there's a lot of these out there. Right? These projects say, hey, like check this project. They have a pretty like they'll have like a sometimes it may even look believable that this looks like a pretty cool like a game that they're building. It's like maybe like World of Warcraft on blockchain, right? But it turns out that it was just a front to get people to like buy stuff, but then they'll actually funnel the money out to like to a mixer account, right?
Right.
So it's important to know this type of stuff, right? You know, like ideally, if you know the weak code, that'd be best, but you don't have to know this stuff, right? It's just by understanding just understanding tokenomics, right? Understanding maybe even within a project, right? You want to see like who are the top coin holders, right? If you notice that within a token, right, one person owns like 60% of the coins, right? It probably spells trouble. Right? I won't name any. Actually, I won't name any names, but I will name the network. Right? How. Right, you probably have heard about like Luna network, about how like they try to pass a couple. Like so called like resolution, right, to fix the problem, right? But the problem was like 1 or 2 wallets happen to be holding like around like 60% of the token. So whatever resolution they put out that was proposed, it was already predetermined by the dev team. But the whole time they would go about like beforehand, they'll say, this is a very decentralized network. Well, it turns out it's not. So it's for anyone who's able to see this type of stuff, right? They can like protect themselves. They can give themselves like an extra layer of protection. I mean, there's no guarantee that they'll be like they'll be invincible in this space, right? But you'll be like having that extra layer of protection with your knowledge, right? Of how to look at like analytics and data and such. So
yeah. And as a level 3, you may not be able to read the code, but at least you can see if it's even verified, right? Like if the code is not even verified, don't put your money in, right? Because who knows what the code is doing? Like it can just take your money, right? So so that's kind of what I have to say about these 4 different levels. And I just if and my kind of the reason I'm attending these meetups is trying to get everybody to at least become a level 3 user, right? Or at least a level 2. Let's just put it this way, right? Level 3 is kind of wishful thinking because level 3 still needs a little bit of work. Level 2, right?
If you get to level 2, you can take your time getting to level 3 because at least you've taken that self-sovereignty, you've taken it off of a centralized exchange. If you're on level 1, then it's if the rug gets pulled, if that company goes bankrupt, you're shit out of luck.
You can only
so
cry.
If you get to level 2, you're at least safe from the market fucking up, and you just have to take the time to learn what else you want to do.
Right. Now, is this going to help you make more money? Because I guess that's always the question I get. How is this going to help you make more money?
Hold on to your money.
Exactly. It may not help you make more money, but it helps you to avoid all of these problems, like problems that the Celsius depositors are facing, right? Problems that the Voyager depositors are facing, right? Like, I have
all those other little exchanges. There was that like Vald one or something. There were a dozen of them that have come out in the last little bit.
Right.
Yeah. Okay.
BlockFi even stopped withdrawals or limited them, right?
Right. So
I guess while we're here, I actually want to share like an infographic I put together. This was like a while ago, right? But I think this is a pretty fair infographic for those who are still new. That talks about different stages.
Yeah, like at 2:30 or 3.
Yeah, I think it was like. Oh, sorry.
Yeah. I was saying how it talks about different stages. So it may not be like as simple like with 4 stages, right? But I think these are like more like steps, things that you. I think this is more of a personal opinion. And like I recommend people to like get to like. It's a bit outdated because this was like before the whole like the centralized everything. But you talk about how like before you get to anything, right? Try to understand how crypto work. Get yourself a mobile wallet. I guess this is sort of like self-custody, right? And I also think that's probably a good idea for HODLers, right? To be surrounded with mentors, right? Not like fake mentors who want to like sell you stuff, right? But I mean like real mentors who are willing to like help you learn without expecting anything in return. Like, I mean, you notice that I don't even sell anything here. Like, you don't see me saying like, this session is brought to you by like ShakePay. Like, I don't believe in this stuff. Like, I'm not going to give names about like which other people are doing it, but there are a lot of people, right? A lot of these like influencers out there, right? YouTube channel, like YouTubers, right? They'll give you some education, but then all the education loses credibility. Like the moment they say, "Hey, sign up for BitBuy," and basically these type platforms where they make money when people leverage, and it really gets me like really upset about how like people will like sell like they'll like sell like people. I guess they'll trick these people into like signing up for these dangerous platforms, right? So yeah, but yeah, especially mentors, like people who are willing to help you because like they want to see you succeed. They want to see everyone succeed, right? Not because they're getting a kickback, right? This is another big one too, right? Test it for a small amount, right? So instead of like going all in, right? Especially if you're still a level 1 user, right? Personally, I would. Like if I were to start over again with like zero knowledge, right? It's common sense to start with a small amount. Like no matter what like other people are saying, like start with a small amount, move to level 2, level 3, and then put in what you're comfortable with, right? Don't be like the guy who mortgaged his house at the peak of the Bitcoin bubble, right? Don't be like I can probably say that he's a name too, Cathie Woods, right? For like by dumping in like a lot of like money into Coinbase, right? When it was at 250, 260, right? We may have heard about today, right? She dumped her like Coinbase share at around like $55. So she suffered like a 75% loss, right? Don't be like Elon Musk, right? Where he also dumped his like $1 billion worth of Bitcoin at a loss. Like, even though he still owns 25%.
I think his loss was only like 9% too. He didn't buy that, but that was more him fucking around with Tesla's cash flows because they were so negative. But I agree, he fucking paper hands it.
Yeah, I mean, I'm sure. Yeah, I mean, like accountants, like you could say it. I mean, he was playing strategic. He wanted to. I think Tesla was running a negative cash flow for that quarter, so he had to paper hand it just to bring it a bit above positive to trick investors thinking, oh, it's still positive this quarter. Yeah. Right? And then also number 5, right? Be informed about the market and news, right? You can't like like you cannot be uninformed in this space, right? If you want to be uninformed in the space, just buy Bitcoin and HODL and put it on a ledger and come back 10 years later, right? But doing that is no different than like someone buying gold in 2002, right at the bottom of the dot-com bubble, right? You can still make wealth that way, right? Buy gold, right? But those who did the research, those who bought like other equities like Microsoft, right, who bought into like IBM, HP, right, Apple, right, in 2002, they made a lot more wealth. But more importantly, right, they were at the forefront of like the technological revolution, right? They can say that I was part of it. Even though I may not be working for Apple, but I had shares of Apple. Like that's one of the things that I think a lot of like people who held Apple stocks were proud of, right? So I think it's good to be informed about the market and news, right? Don't get distracted by coins early on. Some of you may recognize this logo, but for those of you who are new, you probably won't recognize it, and it's actually better for you to not recognize it because a lot of people lost a lot of money because of this altcoin right here. But yeah, don't get distracted altcoins early on, right? Just stick with the blue chips, right? Bitcoin, ETH, right? Those two. Even though I know Gary Gensler tried to cut ETH out as a utility, but there's still a lot of application that's being built on it, right? Until you understand how the blockchain works, right? I'll say until you get to level 2.5, right? That's where you want to. That's probably when it may be safer, right? No, I'm not saying it's safe, right? But it's safer than someone who doesn't know anything, right? Before venturing out to other networks, right? Other L1, L2 networks, right? Always a good idea to get yourself a wallet, right? You don't want to. You always want to have a self-custody, right? And of course, remember your password too. You have a wallet, remember your password. Don't do a screenshot. Don't write on a computer, right? Don't save it as an email on your computer or email address. A lot of these could be compromised. I think that having on paper is probably a good first step. But I've seen some people, they've gone to set up on going to a workshop, those some hardware workshops or woodwork or metalwork workshop, right? They'll actually get a piece of metal, they'll engrave their seed phrase onto this. And I think this is probably one of the safest way to go, right? Because what if there's a fire in your house, right? You lose everything. If your seed phrase was on a piece of paper, there goes a paper, right? There goes a password, right? If you left your computer at home, right? And there was a fire, right? You lose your computer, everything, right? So having it on metal gives you one added layer of protection. And you see Travis has this. So that's and
so this is a spare blank one that I've got that I haven't filled out. So there's no point of trying to zoom in and get my seed phrase off of that. But best way to store it.
So I saw a question from William, right? So he's saying that he has funds in a cold wallet. So how do you make money with your money and sitting in cold storage, right? So this is where DeFi comes in, actually. So when this is interesting, right? Because
DeFi get there. DeFi is at
yeah. So
just to answer his question.
Now the question is, when you send funds to a smart contract, is it custodial or is it non-custodial? Here's my answer to that, right? So a smart contract can be either custodial or non-custodial, depending on how it's written, right? Smart contracts are inherently non-custodial because smart contracts do not have private keys. So without a private key, smart contracts cannot sign transactions. A smart contract cannot sign transactions by itself because it does not have a private key to sign transactions with. So by definition, that makes it non-custodial, right? Now, because a smart contract that doesn't do anything isn't really all that useful, right? So what you can do is a lot of times smart contracts allow obviously functions to exist so that you can interact with it. If a smart contract is properly written where it has no owner and after it's deployed it's immutable, then that smart contract is considered non-custodial, right? Because it doesn't have a private key, so nobody can force it to do things. And it can't do stuff on its own. and all of the functions act on behalf of the signer, which is you, because you have a private key because you have an externally owned account. You can call these functions to either deposit or withdraw, and nobody can stop you. So they can't put a hold on your funds. They can't prevent you from calling withdrawal. Like, no way. Like, there's physically no way. Even if they get an order from the Supreme Court, they can't do it, right? Like, it's that extreme. Like, there is no way to do it unless you get rid of the whole network. So basically, that's non-custodial, right? Now, when a smart contract becomes sort of custodial is when there's a backdoor, right? Let's say they put a owner function in there and they put in a couple of withdrawal functions that allows the owner to withdraw funds in the contract. Then you can argue that, like, if you see that kind of like shenanigans, then at that point it becomes custodial, because now somebody actually has control. The smart contract still has no private key, but whoever can call that authenticated function can sign with their wallet, which has a private key, and then that transaction can trigger a release of funds that kind of allows them to take your money, right? So it can be both. That this is where level 4, like talking to a level 4 person, would be helpful here to see if you can actually safely put money into this contract, like whether or not it's actually custodial, right?
Yeah, that's pretty good explanation. Like custodial and DeFi, but yeah, and I mean, just circling back to like what Willie said, right? I mean, like in the over the long term, right? Your like crypto is most likely going to go up. I mean, history has shown that like crypto has gone up. A lot of assets has gone up over time, right? And like if you are holding on to crypto, right, consider yourself like ahead of like 95%, if not 99% of the whole world. A lot of them, they will lose value. Like their crypto, not crypto, but their assets, right, which is fiat currency, right, is depreciating in value, right, over time. Like with all this money printing, all this inflation we see, right, like fiat is losing money, and just by holding on to crypto, right, you are like moving ahead in the world, right? So that is something to be good about. And unless you're willing to like take on more risks, right? Like you are sitting at a very comfortable place, right? You can, and then if you want to, right, that this is where like step 10 comes in, right, with all these stuff, right? But before step 10, right, I always recommend like having like a game plan, right? Know like how do you want to get in, how do you want to get out, right? What is your risk tolerance level, right? Are there any things that you absolutely never touch, right? Some people, they may be like they may not understand NFTs and they'll never touch NFTs, right? And it's always a good idea to have these game plans, to have these I guess like you can call these like policies or investing like rules of thumb to go by, right? Because the last thing you want is to be emotionally like to buy something just because like it sounded cool because somebody told you to get it, right? Or maybe you watch a video, the ad was very enticing and you bought it without thinking, right? So sometimes it's a good idea to have some game plan and review it once in a while, right? Whenever the market changes or a different season, right, you may want to like adjust the game plan, right? And then of course, like buy more as you feel comfortable. Then this is where you can get into other stuff, right? Go into like this is where you can go into like altcoins. You can go to like ICO if it is still safe, right? If there are projects that you do believe in, right, and everything that checks out because you've done your research, right? You could look into these, right? Maybe like mining, trading, and such, right? But a lot of these, like, they do require like a lot. It's a journey in itself too, right? You're not going to be good at this. In fact, you probably may lose a lot, like in the first 5 years, right? And also a lot of these rules, like they may change too, like especially with the world of trading, right? One YouTube trading commentator talks about how the last like 15 years, right, in the stock and equity space has been a bubble. It's been like we were in a season where the Fed like the Federal Reserve in the US, right, and also in Canada and many parts of the world, right, they were printing money, right. That's why we had this market rise, right, because it was all like a Fed induced like bull market. And now they're shutting off the tap, and we're starting to experience the first time in like 15 years, like what life is like without the printers. And I mean, like, it doesn't take that long to see that like things are starting to fall. And the question is how far down is it going to fall? We don't know, but there's just a lot of things happening, right? And expect to be making a lot of mistakes. Probably a good idea to document your mistake, learn from mistakes, don't make the same mistake twice, and also always remember to take profits too, right? You don't just want to just have a lot of like paper profits, right? Sometimes it may not be a bad idea to like cash out, reward yourself, treat your family, right? Because what's the point of accumulating, right, if you're not going to enjoy it yourself, right? So this is just a simple infographic I put together for anybody who's new, want to get a good idea. It's by all means not like an absolute guide on like how to get into crypto, but this was also like, this is probably the journey I would like I will share with people, because this was a journey that I went on myself too. So this just a quick quick I guess more of like a detour. Right. So do we have any other questions?
I think, as Rob mentioned, there are some things that allow staking directly from within the hardware wallet too, as far as ways to earn yields. I don't know a lot about that. So for anyone who's joining us here, I am the resident Bitcoin maxi who is like, fuck all this other shit, just HODL. But I do like to hear about it and see what's going on, and hear James talk about his like what he's seeing in the space, because you're a lot closer to it than I am. So it's useful, but I just don't like the risk.
Wallet like staking, but I'm not a Cardano user. I can't say too much, but I've seen a few people talking about how like, oh, you can stake without like losing custody of the Cardano.
Yeah, I've seen that. I just know that I've seen that as kind of a headline thing. I didn't even know if it was Cardano or other chains. I just, to Rob's point in the chat.
Yeah, delegated. So there's the delegated staking model. I think that's like I think Cosmos, Luna, right? Terra had that before.
That's not an endorsement.
Not a good. Yeah, so ETH doesn't have the delegated model. ETH has a different model. Now
you're trading it for like a token. I think you could stake your ETH for ETH 2.0. I guess they don't call it 2.0 anymore, but at least.
Yeah, so you can do either illiquid staking or liquid staking, right? Yeah. So if you're gonna do illiquid staking, you have to deposit your token or your ETH into that deposit contract, and then it's basically one way at this point. So but you can deposit from your cold wallet if you want. I mean, there's nothing against you from making a deposit, right?
But it's giving up. It's giving up.
Yeah, custody. It is giving up custody for making a yield. Sort of, right? Because if the contract doesn't have private key, you're not giving up custody. So it's still only your private key can get the funds out. That's what custody is about, right?
Fair enough. True. It's custody, but it's locked. So
it's locked.
Yeah, hence the illiquid. Yeah.
All right, but you don't want to lose your key for sure in this case, because a lot of people they make a deposit and forget about it, right? And they had no idea, like later on they're like, oh crap, I still have the 32 ETH locked up in there.
How do I recover that?
How am I getting out, right? And no private key, right? So yeah, you have to be careful with that. But the benefit of illiquid staking is that you're basically so assuming that the deposit contract is secure, right? You're only taking on that risk, right? That's only one layer of risk, and also you're getting the max yield, right? Whatever the contract offers, you're going to get it, right? Like that's the benefit. With liquid staking, you're adding another layer of risk on top of it, which is the liquid staking provider. They can be centralized, they can be decentralized, but regardless, you're getting another layer of risk, and you're likely going to give up a little bit of yield.
I can give an example of liquid staking, right? So within the ETH staking, right? Not everybody want to lock up their ETH, right, for ETH 2.0. So you have a lot of these like I guess these like in some sense you call these like future contract provider, but what they do, they say that, hey, we'll do the staking, right? We'll do the staking, but we'll give you the option to cash out, right? To undo, right? To take back your stake. Of course, you lose like a small discount, right? So you have like platforms like Binance, right? I believe they use BETH, which is sounds like SBEF, spells as BEF, but it means a Binance ETH, right? What they have is they have a pool that they stake on your behalf, and they'll issue out BEF tokens, right? And if for any reason that you have like buyer's remorse, right? You need that ETH, right, to pay for something, right? You can actually trade in your BEF tokens back to ETH, right, or to stable coins or anything, and
so it creates a second, like it's essentially a wrapped ETH, like another wrapped ETH token, and you can trade that one.
But it can depeg, so you have to be careful with that.
Well, it's that it's not pegged, it's that there's a spread of that token relative to ETH.
And I've seen that.
Well, there is that
like basically 0.9 of an ETH. So people treat that as like a for that flexibility of being able to like back out, they're willing to like give up 10% of the value. So and I've seen sometimes it drop down to around like 70% of an ETH. So it does fluctuate.
That peg is because it's liquidations sometimes, right? They're not.
Yeah. Well, and again, that's where I'd just like to clarify. It's not pegged like a.
It is.
Well, no. Hang on. Let me explain, because I'm getting into semantics here a little bit, but let me just finish that thought. So the peg is like Tether is pegged to $1. You can go back and redeem a USDT with Tether, the company, and get $1 of securities out, right? Like that's the peg, is there is that third party providing that way out where its value is pegged to $1 because you can redeem it for $1. With the staked ETH or Binance ETH, you can't redeem them for the ETH again because that ETH is locked in the contract. But these are free floating tokens that are meant to represent one ETH that has been staked. And so they come with, when it's unstaked, you can redeem it down the road, and that it comes with some sort of interest rate or like return that you're getting.
That is not the industry term.
It's not, but it's just trading. It's just trading in relation,
but it's
not redeemed for.
It can be redeemed, right? So once it becomes redeemable, there's a time period.
I know, but it's not redeemable right now, and like that's what the peg is really like. It's a proxy for ETH, but it's trading on the open market.
So my understanding is that as long as you have a market and you have a market price versus the inherent price of the security, and that is the peg, right? It's just like GBTC.
Again,
so it's like GBTC.
It's semantics, yeah.
It's like the GBTC discount. You can call it it's losing its peg by 30%, right? Because normally GBTC should be traded at the Bitcoin price, right? Because it is Bitcoin. It holds Bitcoin, right? But because of the secondary market pressure, it starts to lose its peg to the Bitcoin
but again,
price.
That's where I'm saying I wouldn't call that pegged. I would say it's a derivative asset that trades at either a premium or a discount because the market has assessed there to be risk in that second layer. A pegged asset is one that I can redeem for some security where that is written into a contract that I can redeem this for this security worth a certain amount. So a peg is like a contractual thing, whereas this is another asset that trades on its own market that can trade at a premium or discount.
Yeah.
Again,
well, in that case, Tether is not pegged either, right?
But you can you not redeem it?
I know they've got not directly.
Not an individual, I guess. Yeah. Not it. Yeah, that's true. Fair enough. All right. Yeah. Anyway, I just like arguing. I just wanted to argue over semantics and the terms.
Yeah, same here, right? Because I work in this industry. I have to know what the correct terminology is, right? Like I need to be a stickler when it comes to this stuff. Like you don't want me to go all hand wavy, right? Because then you're not going to trust anything I write. So I have to either have the right answer or get it from some source, right? So
yeah, and also to add, right, like a huge, like I guess like downside, right, working with liquid staking, right, is what if something goes down like that? What if Binance goes down and under, right? What if SEC comes after Binance, or what if they get hacked or whatever, right? There's also a chance that the issuer, right, if they go down under, you lose everything. Like you're still holding on to like Binance ETH, right? But if Binance is gone, you can't redeem your money. Your ETH is worth nothing. So that is that added layer of risk, right? That you are facing, right? Working with like either Binance or any of the other like liquid staking platforms out there. And I think William's asking about like ADA with data. I can't comment because I'm not on the ADA network. So yeah, you have to do your own research on that.
Yeah, I'm not familiar myself.
no. Come on, you'll never progress beyond level 1 if you use ADA. No, just kidding. I just see. I'm like, see, you're a Bitcoin maxi. You like to shit on altcoins. I like to shit on Cardano. That's what I do.
we have that in common then.
Right.
I just shit on XRP.
But again, like, yeah, I'm not familiar with that one. I don't know, like even getting away from the whole, which chain is it on? I'm just not familiar with that. The Daedalus safe. So I definitely, do your research, try and find someone who's more familiar with it.
Yeah, we're getting close to the 90-minute mark. So yeah, so I think we're going to see if there are any final questions from anybody here. Let's see. I can tell that yeah, a lot of you guys have been awesome for tonight. So yeah, and thank you for the questions, William. But yeah, any other questions? Jessica, got any questions? Michael, Alex, any of you guys got any questions? Okay, you're good. That's good to know. Okay, I'm hearing none. I'm going to end the live stream. I'm going to end the live stream for now because the live stream is getting a bit too long. But yeah, and I want to make sure it's a digestible link for everybody who's watching in the future. So for those who are watching for live stream, thanks for joining us. I'll see you guys at the next month, and we'll continue having I guess the after party for maybe about 15-20 minutes before we